What is going on, everybody, and welcome to another weekly update. Now, in this video, what I'd like to do is provide you a state of the market and stock picks for the upcoming week to get you prepared so you are not blindsided by the volatility and the craziness that is currently the market. So if that sounds like something you're interested in, so consider subscribing, as I do also provide daily updates to get you prepared for the day and week ahead. So this week has been very, very interesting. It was a very historical week. We got a 50-point basis increase on rates from a Mr. Powell. And we are going to essentially start tapering bonds come roughly around June. So this was initially taken very well because people were estimating essentially about a 75-point basis move with possibly even 100% bond or asset purchasing removal coming into this meeting. So being said, we did get a very nice little pop right after Powell, but it was soon met with a lot of sell pressure coming in. So what does that exactly mean going forward? We're looking at current events coming up. We're pretty open in the clear as to what's going on. I think ultimately what we're doing right now is just really digesting what is going on with the Fed and how they are interpreting what's going on. A very key thing to understand is Powell did say that inflation was extremely high. He admitted that and saying that they're doing what they can with the tools that they can, understanding that the future is uncertain and that things can change. But even with that being said, we don't really have a lot else going on. Currently, right now, the war is still going on. There's still a lot of mixed messages coming out of there. It doesn't look like anything's stopping. There's a lot of earnings. A lot of big tech industry leaders have done extremely well. Others have not and got essentially just obliterated. Because of the past 2 years, a lot of companies have been really pumped up, for essential forward numbers, PEs that were, out of this world. It was across the board. It wasn't just on some of these other ones. Particularly the one that always comes to mind is Shop. Essentially got obliterated almost to 80% of what it is currently sitting at. And then you had a lot of other ones that have been mid cap, small caps, have been just inflated beyond belief. And so now you're getting a full year of normalization in a lot of these stocks coming down to normal levels. And so coming in with all the different rate raises and stuff like that, we're looking at potentially a 75-point basis move on the next earnings. Again, really just depending, Powell and them want to really see on how fast, if this 50-point basis move is going to help with inflation, and then they'll gauge the rest of them after that. They are predicting at least a 50-point basis move in just about every meeting from here on out. But again, that's changed. Again, they said 75, now they're saying 50. The 75 really comes from Fed futures and how they are kind of predicting, but when they actually come out and talk about it, they go a little bit lighter than that. So we'll have to see coming into the next meeting. But we start this week, just kind of give you an outlook of we are still in a bit of an earnings mode, but a lot of the big earnings are done. A lot of the rotation is kicking in to where we sell off. And from this point forward, it's pretty much going off of news. And now we are coming into those slower months in the market to where the market really doesn't move a lot. But considering the volatility, considering that we've been pinned and have the Fed, there's been a lot of volatility in the market. And I think we are not done yet, especially if we break this current level, which is a level I've been essentially talking about all week, which has been the 4130 mark. We've been flirting and dipping below this. What the problem is here is our close is actually below this level. Now, this is going to be important coming into Monday, because if the market stays down here on Sunday night, we could potentially get a heavy flush down to some of these other key levels. More so, you're looking at least about that 4K mark, that psychological number, that 3,900 mark is another one, 38. There is not a lot of support in between here. Essentially, pretty much a lot of your psychological numbers could potentially, and then if you're trying to price in another 25-point basis move, which could potentially drop us another 5%, you're looking around these levels or down here, and that's on the general index. So that would essentially correct the full market roughly about, let's look here from the top, from essentially where we've been. We've corrected 15%, so we're looking kind of roughly around a 20% full correction on the year to try to price in the Fed. That sounds about right. Sounds about normal on a true correction. That's kind of the midpoint when we start turning around. So I think by next week it might be pretty bloody, just going down to these levels. But I think this, if this is true, and this is what we start doing, because you have the 50 and you have the 20. You have the 200 weekly EMA and you have the 50 EMA monthly. It's very rare the market blasts through this. You have to have a black swan event to essentially almost break through this. Now you got this double support down here, and the market isn't going to actually tag this line. You have to understand the market comes very close to this line. So again, around that 20, that 5-point percentage move, it's kind of roughly what we're looking at. That would give us roughly around 20% on the year correction, what sounds about a good correction for all the havoc that's gone on with the Fed this year. And then that would be a good time to start reversing. So I think we have one more strong dip, and that would allow us, I think, for more buying opportunities if you're an investor to reverse this thing and start getting back up. But ultimately understand that this is a key level and we close below it. And so again, Sunday and Monday morning are going to be extremely crucial on if we are open up down here or not. And then from there, we'll see where we end up. But my outlook, I've been playing, and biggest thing I've been playing is I've been sitting cash mostly. I don't hold anything overnight. It's very rare I do. When I do, it's very light positions. I don't play heavy on positions unless you have a catalyst like, hey, Powell just announced race increases. The market liked it in the last 30 minutes. It was already exploding in the close, possibly then. But it has to be like event driven. Maybe the war stops and that could start ripping this thing back up again too. So there's a lot of different catalysts. Let me actually bust this sheet out because I've been talking for a while and haven't even bust the sheet out yet. But upcoming events this week, earnings still, we have Monday. We have Palantir, we have UPST, we have Roblox on Tuesday. These are the kind of ones I'm looking at. Aside from that, again, there's still a lot of earnings going on, but I don't really care about that. I'm really kind of concerned about the general market, and I've been playing the general market. I've been playing the index, and then industry leaders. So that's why I've always had Tesla on here. Apple's kind of wishy-washy, so I haven't really put that, but Tesla makes big moves. Google makes big moves. Shop makes big moves. UPST has earnings, so I have them on here. These are all essentially the predicted moves that you can find on the option contracts for that week. It's always good to watch those because I always like to trade the big movers. And if you look on those option contracts, it gives you kind of what they're estimating for the upcoming week. That kind of gives you an idea that they're looking at events as well, perhaps an event that you're not aware of. But if you can watch these expected moves, they help you determine what you should be watching during the week. So again, that's what I got. SPX General, we're really watching that key level. If we open up above that, again, we're going to go right back up to that, essentially that 4,300 mark. We're going to continue just to consolidate around here. For what event? I don't think there's any other events we're waiting on currently right now. But ultimately, if we do break below that, again, I see at least 5% more down to the downside. Aside from that, we could potentially even start running up and try to retest this trend line, which would roughly put us around that 4,400, I think is a possibility. I think that will be the next essentially zip line straight up to 4,400. And then from that point, I think, again, that might bring us into another event that would cause us to possibly sell and chop more before we head back up. We also got midterms this year too, which is a year which you get a lot of this chop and volatility along with the Fed. So it's just been a nasty year in general, but I think we'll still close out the year very strong. You just have to be patient. Let's get into crypto, Bitcoin. Now looking at Bitcoin, it's still holding the 32. Again, still very good consolidation area, even though it broke the trend, that old trend. I don't really care about that old trend. More so, I'm watching this level it's currently at. Still holding very well. I think this is very stable in my opinion. If the market does continue to sell, we might get a wick down at 30. Strong possibility. Looking for a 5% it would kind of bring us back down in the bottom part of the zone, and then potentially start heading back up from there. But I still really like where Bitcoin is right now. Just watching it, it's actually been holding really well compared to the market. So that's also something to consider and be watching, is that it is definitely held up better. Now, the individual stocks like your Coinbase and everything that are kind of based off of crypto have been getting slammed. And that's one thing to keep in mind. Like sometimes there's a ratio where they run in, or sometimes they run in parallel and sometimes they do not. Those cycles come in and out. So something also to keep in mind. Just because Bitcoin isn't selling doesn't mean coin hasn't been essentially wrecked, because it has been. So you have to keep that in mind. Sometimes they run together, sometimes they do not. So let's get into some of these other ones. Let's get into Tesla. Tesla is a good play always when you got a lot of volatility because it recovers very quickly. Big key level we're watching here on Tesla is at 860. If it does break below that, I think you get this thing can sink nicely down to 780s, and then potentially you got the 20 email on the monthly is sitting around that 722. I don't really see Tesla breaking 722. I think if it gets anywhere near the 722, it's going to essentially wick and head back up. Again, my opinion, but I think it could be a strong possibility again if the market starts really selling heavy. Tech always gets hit first very hard, so that's always something to keep in mind as well. If there's any kind of pump in tech and then you find out there's inflation concerns or whatever, those are always the first ones to go after, because they have these massive sell-offs because of that. But it is holding this 863 very well. Something to keep in mind. You also have this trend line coming down, which is not a good sign. You definitely have to watch this trend. So even if we get a bump out of here, you're probably looking around that 925 mark. If it doesn't break that, you got to really be careful of that trend line, because it's essentially been rejecting hard off of that. So again, there's Tesla sitting in a lot of resistance right now and very little support. So you definitely want to be very careful. Again, we're back under the 200. We got rejected hard off of it today. Really watch and see if this key level, this 50 breaks. Again, if the 50 breaks, you get that 20. So I'm kind of really looking at Tesla is that 20. Again, this week, if we really start selling, that's again what I'm looking at. So again, there's some speed bumps along here. You'll get some bounces here, but definitely keep those on watch. UPST is another one. This one's actually recovers very quick, like Tesla. Like it's easier to play to the downside on this one than on the upside. But something I've seen, now this is just, we are getting a lot of wedge breaks. What I've noticed is that a lot of banks are the same setup. The banks haven't broken out yet. UPST has, because it does have earnings on Monday. So that could be a potential why it did break out. But this one could go parabolic along with the market. If the market catches on, the market holds and starts ripping up, this could be very good and start running with it as well. I think this one could make up a lot of spaces this coming week. Again, it really depends on the market sentiment. It could crush it, and then the market sentiment is, we're still selling for that 5%, and then it's not going to matter. It's going to be like everything else. It'll pop up, 5% aftermarket, and then it'll end up selling off pretty heavy before even market opens. So just keep that in mind. But one I definitely want to keep on watch this week. Again, there's some key levels here, or essentially around the 100 mark, psychological number, the 122 mark, some big numbers. And then we have our base currently right now sitting at 70, roughly around 72. So you really don't want to break in below this, because then you're really starting to sell pretty heavy at that point. And if we keep correcting a lot of these numbers, you haven't seen this far down in a long time. So just be mindful of that. But again, a good company. Hopefully it does well in the earnings. If it does do well in the earnings, then there'll be another reason to possibly invest if we do get another 5% to the downside. And Google is the other one I got. Again, another one that does very well whenever the market starts bouncing back. Again, a wedge. All these I thought were wedge breaks yesterday. It just broke us back into the wedge. So are we going to actually break out and start running? Again, key level here to watch is the 2260. And we break that, we're in trouble. Could get quite a bit of free fall if that does happen. Otherwise, again, we're getting a lot of these breaks. I think now that we got full digestion, the market was holding very well. I didn't want to break this level, not just Google, but the market in general. Everything looks the same at this point. So I think once we start ripping, we'll get a nice little pop. I could see us potentially even getting at least back up to 2,500. So that's, a good, that's over 200 points right there in itself. I think could easily recover for Google. And then if it does break that, which the market general sentiment needs to be very good to be able to do that, then get back up to 27.35 and then potentially up there. But we do have that 20-to-1 stock split. So we'll see how that happens. We still got a ways before that happens, but we want to keep an eye on that one. And then Shop. I got Shop on here because this thing has been getting absolutely obliterated out of its mind right now. And I'm looking more for this one for the short side, for any kind of short plays. So this week is kind of like my big short play stock. Anytime this thing pumps, so it needs to break back over the 408, gets back up to the 485 is another heavy resistance. But if it gets back up to roughly around that 515 mark, the 500 mark, it would be awesome for a great short because you have the 20 EMA sitting right there. And it really hasn't tested it. It attempted to retest it, but it failed. Obviously, you had earnings. The market sold off because of Powell as well too, so it didn't help. And then you had bad earnings on top of it, so it kept selling. But if it does reach it back up to that 20 EMA on the daily, expect a very hard rejection on this thing. It'd be good for a great play, in my opinion. So that's something I'm kind of watching this week. And then I just want to go over banks real quick and kind of show you what I was talking about. Goldman Sachs, all these banks look the same. You have a descending wedge here, which makes me believe that so you have a descending wedge here, which makes me believe that we're going to go we're going to go make a huge move this week, whether it's to the upside or to the downside, there will be a huge move. And if this plays out like most patterns this way do, which I think it's roughly like 80% or something, the way this pattern plays out. So I'd like to play this pattern. Maybe not even that high. I think it might be like 75%. But it's one of the patterns that do work really well. This descending wedge, we could get a nice break back up of this. And then, you cover almost roughly around half or so of this move. So you're looking back up to at least that 373 mark potentially. So you look at Goldman Sachs, you look at JPM, they all have this descending wedge. So this is something you really need to watch. Massive descending wedges on Bank of America as well. So this is why I'm thinking we could potentially be bullish coming into this week. Again, now that we had Powell and we had kind of full digestion, because that's what really matters. Sometimes you need 2 days to fully digest what's going on with Powell. But again, another descending wedge could be a massive play coming into this week. So again, I'm not bullish or bearish coming in this week. I'm keeping an eye on the banks because if the banks start pushing, that'll pull up the index. And then soon behind that, you'll have some of your big tech that did really well, your Apples, your Tesla, and they will help guide the whole market back up slowly. Again, those ones will lead. Why I always pick those in a volatile market. And then I turn around and I get some lower cap, smaller cap stocks after that. So that is what I got. If you've made it this far, I appreciate you. Go ahead and drop a like button. And until next time, I'll see you guys later.